Hi everyone, welcome back to my channel Astra. Today we are going to discuss on generally accepted accounting principles, the different classifications of accounting principles. So let's move on to the topic. So generally accepted accounting principles, otherwise called as GAAP. So what does this GAAP refers to? It refers to the rules or guidelines adopted for recording and reporting of business transactions in order to bring uniformity. In order to bring uniformity. Okay, so these generally accepted accounting principles are the rules or guidelines adopted for recording and reporting of business transactions in order to bring uniformity in the preparation and presentation of financial statements. So, GAAP refers to those rules or guidelines adopted for recording and reporting of business transactions in order to bring uniformity in preparation and presentation of financial statements. Then let's discuss on which things these rules or guidelines are based on. These rules or guidelines are derived or based on the past experiences, otherwise usage or customs, or the regulations by government agencies, or otherwise we can say statements by individuals and professional bodies like ICAI, Institute of Chartered Accountants of India. Such kind of professional body statements can be taken as the base for constructing these rules or guidelines. So simply we can say the generally accepted accounting principles or GAAP refers to those principles or those rules or guidelines adopted or used for recording and reporting of business transaction in order to bring uniformity in the preparation and presentation of financial statements. So hope you got a clear idea on what is generally accepted accounting principles. Principles are not always static in nature because they are subject to changes. That is, sometimes the principles may be influenced by the changes in the legal, social and economic environment. So we can say that these accounting principles are not static, that is not permanent in nature. Now we can discuss the different classifications of accounting principles. Accounting principles can be subdivided into two, that is accounting concepts and accounting conventions. Accounting concepts and accounting conventions. Accounting concepts, otherwise called accounting assumptions. Another name for accounting concepts is that accounting assumptions, and the same way accounting conventions, otherwise called accounting principles. So the accounting principles can be broadly divided into two, that is accounting concepts or assumptions and accounting conventions, or otherwise called accounting principles. Here, accounting concepts or assumptions refers to the necessary assumptions or ideas fundamental to accounting practice are referred to as accounting concepts or accounting assumptions. Then what about the accounting conventions or principles? These are the customs, these are the traditions or the customs or traditions which serve as a guide to preparation of accounting statements is called accounting conventions or principles. So these are the broad two classification: accounting concepts or assumptions and accounting conventions or principles. Now we can discuss this accounting concepts or assumptions in a detailed way. So first one, it is going concern concept or going concern assumption. So as per going concern assumption, a business firm would continue to carry out its operation indefinitely for a long period of time, and there is no intention to close the business or scale down its operation significantly. That means every business organization is having a continuous existence. That is, there is no plan to close the business immediately, or there is no plan to reduce the operations or the scale down the operations significantly in the near future. That is, this is a basic assumption behind accounting, that is going concern. That is, a business will be continuing for long. That is the going concern concept. Then second accounting concept is that consistency. Second one, that is consistency. So what is consistency assumption? Consistency assumption states that the accounting practices once selected and adopted should be applied consistently year after year. That is, this will help in better understanding of interfirm and intra-firm comparisons of financial statement. Consistency in what? Consistency in preparation and presenting the financial statements is called consistency. So, consistency in accounting practices. That is the consistency concept. Once a method is selected or once an accounting practice is selected, that same practice should be followed throughout the business operations. Now we can discuss the accrual concept. As per this accrual concept, a revenue is recognized when the goods are sold, or we can say the service is rendered. That is, sometimes the payment may not be receiving on the spot. Then also we can treat the transaction as done, because as per this accrual concept, the receipt of cash or the payment of cash is not taken into consideration. Only the transaction is recognized when the goods are either sold or the services are rendered, and the same way expenses are also recognized. Expenses in the same accounting year in which revenue relating to it is recognized, whether the cash payment is made or not is not taken into consideration. This is the accrual concept of accounting. So revenue is recognized when the goods are sold. When the goods are sold. That is, the receipt of cash is not taken into consideration for recording a revenue. Now let's discuss the accounting conventions or principles. So the first one, it is business entity concept. As per this concept, it assumes that business has a separate and a distinct entity from its owners. Apart from its owners. Okay. Separate entity apart from its owners. So the owners are not the same as entity. They are different. That is what the concept of business entity. Then next we can move on to the money measurement concept. As per this concept, only those transactions and happenings in an organization which can be expressed in monetary terms are to be recorded in the books of accounts. That is the money measurement concept. Then next we can move on to the accounting period concept. As per this concept, it refers to the span of time. The accounting period refers to the span of time at the end of which the financial statements of an enterprise are prepared. So as per this accounting period concept, the end of which the financial statements of an enterprise are prepared to know whether it has earned profits or incurred losses during that period, and the position of its assets and liabilities at the end of that period. So a new business may be having a different starting date, that is if the business is operating after 1st April, that may be in July or December, in any month they can start up, right? So the span of time always for every business will not be the same. The start date may be different for a newly started business. So normally in India, an accounting period starts from 1st April and it ends on 31st March, and the accounting or financial statements are prepared on 31st March of the year end. Okay. So accounting period. Then we can discuss about the fourth concept, that is cost concept. Cost concept. So what is cost concept? Cost concept states that all assets are recorded in the books of accounts at their purchase price, which include cost of acquisition, transportation, installation, and making the assets ready for use. That is, all the assets are recorded at their purchase price. That is, at their purchase price, all assets are recorded at purchase price. Purchase price, which includes the cost of acquisition, then the installation charges, and also if any expenses like transportation and making the asset ready for use incurs, that also should be added to the purchase price. Okay, so this is the cost concept. Then next we can discuss the fifth accounting convention, that is dual aspect concept. This concept, every transaction has a twofold effect, that is dual aspect. Every transaction is having twofold effect. One is debit aspect. Transaction is having twofold effects. What are the twofold effects? One is a debit aspect and the other is credit aspect. That is, a transaction should be recorded at two places. It is the basic principle of accounting. One debit and credit aspect. That is, every transaction is recorded in two places. This whole transaction is having twofold effect. This is the dual aspect concept. Now let's discuss the revenue recognition concept. As per this concept, revenue is considered to have been realized when a transaction has been entered into and the obligation to receive the amount has been established. That is, a revenue recognition is done only when the transaction has been entered into and the obligation to receive the amount has been established. That is the revenue recognition concept. Then we can move on to the seventh concept, that is matching concept. Matching concept. So what is matching concept? As per this concept, expenses incurred in an accounting period should be matched with the revenue of that period to ascertain the amount of profit earned or loss incurred. That is, as per this matching concept, in an accounting year, what all expenses are incurred should be compared to the revenue recognized during the same accounting period. Then only we can assess the exact profit or loss during the accounting period. So this year expenses cannot be matched to the next year profit. That is the concept of matching concept. Once in which year the expenses are incurred should be compared in the same compared with or matched to the same accounting year revenues. So this is the concept of matching concept, that is, expenses incurred in an accounting period should be matched with the revenue of that period to ascertain the amount of profit earned or loss incurred. Now we can discuss about materiality concept. According to this materiality concept, that is, the accounting should focus on conveying material information only. That is, immaterial information should not be disclosed in accounting books. So, material information should be conveyed in accounting books, and material information is recognized if it influence the decisions, then only we can say that is a material information. So according to this materiality concept of accounting, the accounting should focus on conveying material information only, and this material information is one which has the capacity to influence our decision. Those material information which has a capacity to influence the decision is called material information, and this material information should be disclosed, should be only material information should be disclosed through books of accounts. That is the concept of materiality. Now we can discuss the objectivity concept. Objectivity concepts requires that accounting transactions should be recorded in an objective manner. That is, there is no subjective element should be involved. That means it should be free from the bias of the accountants, and it should be supported with documentary proof. That is, objectivity concept states that those accounting transactions recorded should be free from subjective biases of accountants, subjective biases. It should be objective in nature, and it should be free from bias of the accountants, and it should be supported with material evidence, supported with material evidences. That is, proof should be there in order to record a business transactions. Then only the objectivity concept is ensured. That is why this states that in order to record an accounting transaction, there should be sufficient proof or material, documentary proof for recording the transaction. So this is the concept of objectivity. The convention of conservatism states that profit should not be recorded unless realized, but all losses, even those which may have a remote possibility, are to be provided for in the books of accounts. This is the convention of conservatism. So that's, now let me sum up my topic for the day. So here we discussed what is generally accepted accounting principles and the different classification of accounting principles in a detailed way. So let me remind you the thing that if you not yet subscribed my channel, please consider subscribing my channel. Thanks for watching. Bye. Take care.